Hi traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. We're going to get started with our morning analysis. Let's get started with it. Okay, and let's go over to the euro dollar. So the euro, the euro dollar, in my opinion, it still looks pretty damn bullish. I mean, you have to realize that we've had the dip, which is a 38% retracement. If I have to, remind you guys to look at look at the longer term of the euro dollar here, and realize that post FOMC, or this is the ECB post FOMC, we've only pulled back a 38% retracement. Okay, I have to remind everyone that it's been a very shallow retracement. Okay, and usually when you get a shallow retracement, it is a bullish continuation. Excuse me, bullish continuation, and that's what we're seeing right now. I mean, we held the 38% retracement. That's why I'm still long at 111. 111.71 is my cost average. I'm up 40 pips. I'm just sitting in it. I haven't exited it yet, and I'm going to try to hold it through. I want to try to hold it through the jobs report. The problem that we have today is obviously Janet Yellen, and I'm a little concerned that she is going to be a little bit more hawkish than the market expects. Okay, ECB's Makuch says deposit rate cuts as a tool are exhausted. Ooh. Well, that's helping the euro up too. I mean, that's keeping it bid right now. Okay, but looking at the euro dollar, once we hit that 38% retracement, we came out of this range. We had a little 30 pip move yesterday. Remember, we talked about, hey, if we can break out, it's going to give us maybe like 30 pips, and it did. And then we had a little bit of a pullback, and here we are again. What we should do here, and let's remove these lines, is we should see how far can we go, higher, realizing that Janet Yellen is speaking, today, okay, and realizing that she might, she might be hawkish. I mean, that would mean to me that the euro's upside may be somewhat limited. All right, so right now, the 38% retracement, that's capping us, right? That's at the 112.25. Let's just make the assumption that we break above there. Okay, so where are we going to go? 112.75 is the 618 retracement. Does that really coincide with anything? Not really. 50% retracement, not really either. There's not a lot of, there's so much chop through here that, I would just use the 786 as the 618, excuse me, as the benchmark. So 112.75, it's not great resistance, but I think that's a viable target, especially if she's not really hawkish. Maybe she's just sounds kind of neutral. Now, obviously, if she's hawkish, we could come down and break through this 111.40 level. I will tell you that if the euro breaks 111.40, it is going to be very bearish for the euro dollar. Okay, so 111.40 below there, support, that'll give, and that'll be a very, very negative event for the euro dollar. Okay, let's talk about the pound. Okay, the pound obviously has got a little get up and go today. All right, and we're trying to probe resistance. The 618 retracement comes in at 143.40. Okay, and can we continue higher from there? Possibly. There's a previous support that comes in at 143.60. I could see us pushing through like this resistance right to this previous support. There's a lot of price disparity there. A lot of people look at those those big moves and assume that we're gonna fill those. It's not really a gap, but you know, I think a lot of people believe that when you see this price disparity like that, that we're going to fill those types of gaps, you know, in price where there was a massive move. Um, Resistance, in my opinion, yeah, 143, you know, 143.60. That should be pretty good resistance on the way up. I'm going to go ahead and write that down. You know, remember the 618's just below that, so I'll put in 143.40, 60. Okay. Support for the cable. All right, let's figure that out. Look at that spike low. When did that happen? I mean, I was obviously sleeping, so that's important because whatever it was, whatever happened. Okay, let's remove this. We don't need this now. Whatever happened there, it spiked right down to, let's remove that. Let's put in another one. That tells us how important that support is. So this is 142, 141.80. So on a hawkish Janet Yellen, this should be pretty key support on the way back down. Okay. All right, let's take a look at the Swissy. Here's the Swissy. Here's the Swissy, and choppy movement, but you can see that this is support's really holding here. Here we can drop that down a little bit. Okay, got a lot of support down here. 97.20. Resistance for the Swissy would be right retesting this trend line. So let's just imagine it's going to take us all the way back up to highs, right? So that means that resistance is going to be key. If Janet Yellen's hawkish, you know, we might challenge that resistance, which comes in at 97.83, but I'll write it 97.85. Okay. Tight ranges for the Swissy as well. Let's go over to the dollar yen. The dollar yen's been holding up really well, and I'm not happy about it. Okay, but like if you guys didn't notice, here, let's go over to here's the E-mini futures, right? The one thing that if you're coming in a little bit late, one thing I want to point out is with the E-mini futures, we have the dollar yen, which you can see. We had a big divergence for the last couple of months. Here, let's go over to the daily chart. Okay, you can see for the last couple of months, you know, stock market has been rallying. Dollar yen, you know, not so much. Okay, now the stock market's starting to get weak. The dollar yen hasn't rolled over yet, so I think they're trying to, you know, close that gap a little bit. Plus, you know, positioning in the yen is still, you know, positioning in the yen is still pretty long. So that's, you know, that's giving the yen a little bit of an issue, I think. One of the other things too is gold's been weak. You know, gold hasn't rallied, and gold and the yen are inversely related. Okay, so you know, when we have the the gold, you know, not being bullish, and it's just kind of being subdued. It's weighing on the yen. Also, I had actually a couple people telling me that as we wrap up this quarter, the dollar, you know, the dollar yen you know, is in demand going into quarter end. I don't read too much into that, but I've been actually told by a couple different people. So maybe that's one thing that's supporting the dollar yen as well. So anyway, but if you go over, let's go back over to the dollar yen here. The dollar yen has really key resistance at 114. Now, can we go higher than that? We can. And like I've told you guys before, I'm prepared for a move up to 115, 115.50, you know, to establish an even bigger position in the dollar yen. I hope we don't make it up there, but we could. All right. Now, 114 is going to be trend line resistance. You can see it coming through here. Okay. 114 is trend line resistance. We also have channel support. Actually, I'm just going to have to move this up. Let's do it like this. I mean, we're just stair-stepping higher, so you can see at this stage in the game how important this support's going to be for bulls. So that comes in right around 113 and a quarter. So while we're above 113 and a quarter, the grind is higher. Okay. Resistance 114. And I'm still putting it in a bearish trend. I know it hasn't really felt that way over the last couple weeks, or the last couple weeks. We've just been kind of grinding higher. But remember, daily chart, bearish breakdown. We're just consolidating our bearish breakdown right now. All right, but it is holding up well despite the equity market weakness that we're seeing today. Let's see, what else do we got here? It's the dollar yen. Let's go over to the Canadian. Now, the Canadian, what's really surprising about the Canadian is that the Canadian dollar has been very strong, yet crude oil has been weak. And somebody brought that up, asked me the question a little bit earlier. Here, let me figure out who did that. Anders says, I'm surprised to see the dollar Canadian that low compared to oil's decline. What's your take on this? It's definitely an observation that I've made this morning. It's something that I've looked at and said, wow, I can't believe the dollar Canadian's as weak as it is, with crude oil as weak as it is. So we've been pulling back a little bit in the dollar Canadian. Like I said, oh, you know what? I'm going to pick up a little bit more dollar Canadian down here because I think crude looks weak. I think I told you guys this yesterday. The dollar Canadian, I accidentally moved my stop. Well, I did. I wouldn't say it's accidentally. I moved my stop like last Thursday or last Wednesday to 131, like 85 or something, and I got stopped out, and I'm like, damn, where'd my dollar Canadian long go? And I forgot that I had put a stop in. So I've been buying the dollar Canadian again, so I own a little bit of dollar Canadian, which is good because I don't mind having it as a hedge right now, especially ahead of Janet Yellen's testimony. Got some dollar longs and shorts going in, or not her testimony, going into her speech. So it's I don't mind having that position right now. But what you can see is we've pushed down to the 38% retracement here. The breakout point is at 131.40, so I think that should support. Now remember, crude looks really weak, so I'd be surprised if the dollar Canadian doesn't start to get some sort of lift here, all right, and start to show a little bit of strength, all right. Resistance is obviously going to be pretty key on the way back up at 132.25. I think I wrote that down last night on the Forex wrap to our Wise Trade traders. Okay, 132.25. And it is still bearish. Okay, and the reason why I say that is while we're below this 133 level, which is this underside of this trend line, it's still bearish. We have to break back above 133 for it to turn bullish. Okay. Just want you all to know that that to me is I know I'm long and I know I'm trading counter trend, but I want you guys to understand the reason why I put bearish on there. We are below this massive trend line here. Okay, and while we remain below that trend line, I still think it's bearish, even though I am trading it on the long side. I'm just trying to do a little counter trend trading right now. This might end up being, an inverted head and shoulder pattern, but the way I'm looking at it is I think crude oil is weak. So with crude oil continuing to weaken, I believe that the dollar Canadian is eventually going to get a lift here. Okay, let's talk about the Kiwi. I also got asked this morning about the Kiwi. Steven says, hey, I thought the RBNZ was talking about dropping the rates. Why is the New Zealand dollar so bullish? The New Zealand dollar has been holding up, and just because the RBNZ is talking about cutting rates doesn't mean that the New Zealand dollar is always going to be going down. The New Zealand dollar is probably getting caught in the crosshairs between some of the cross flows. I mean, if you look at the Aussie New Zealand came under some pressure. If you look at like here's a good example. You look at the pound New Zealand. Pound New Zealand's knocking its head right up against resistance. There's going to be some buyers of Kiwis here. All right. Once we break higher, or I say once, if we break higher, you're going to see some Kiwi pressure. But there's probably a lot of cross flows that are affecting the Kiwi right now. End of month, end of quarter flows as well. And but right now, I mean, the Kiwi, in my opinion, is very range bound. All right, it is extremely range bound at the moment. So we are getting a bounce. We bounced off the 618. And we noted how important that was yesterday. It's very, very choppy environment for the Kiwi at the moment. I'd be more apt to short the Kiwi on any rally if we can get, from current levels, if we can get a rally up to like 68, 68.50, somewhere up in this neighborhood, I'd love to be on the short side of the New Zealand dollar. All right. I don't know if we're going to make it all the way up there. I'm just saying if it gets up there, that to me would be a good risk reward type of trade. Okay. But, the flip side is the Kiwi has not been able to capitalize on like this breakout of this downtrend line. Okay. So let's see, what do we do with the Kiwi here? Basically 68 cents here should offer good resistance. That is the 618 or just above the 618. So, and then support. I'm not going to write down 67.20. I'm just not going to do it. So this 66.65 is support right now. I just think the Kiwi's range bound, and we're in the middle of the range and we're just bouncing around. I'm just not excited about it at all. 66, 65. Okay. All right. When I get back, we're going to do the Aussie dollar index. The peso, which is starting to get a little bit of lift with some market being a little risk averse. We'll do the Nordic currency, so don't go anywhere. I'll be back in a few moments. Thanks, everyone. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. So seeing, a little bit of activity right now. It's just the equity markets are trading pretty heavy at the moment. Which is keeping the U.S. dollar under a little bit of pressure. We've got the euro, you know, it's trading above 112. The pound dollar is above 142.90. And you know, everything's pretty pretty quiet. I'm still surprised that, you know, as weak as crude is, the dollar Canadian is trading relatively weak. But you know, we're going to continue on with our analysis, and let's go over to the Aussie. Okay, the Aussie dollar is under a little bit of pressure today, and we're sitting on what I consider pretty strong support. Now, the trick is, you know, if we start breaking through, you know, some of the support from yesterday, it's going to be a pretty bearish event for the Aussie. Notice where we turned. You know, we drew this out yesterday here. Okay, that previous support acted as current resistance today, so that's going to be key. And that comes in at 75.70. Okay, and I think the support is pretty key at 75 cents, because if we break through 75 cents, that's going to bring in some downside pressure in the Aussie, especially, you know, because the Aussie's been so damn bullish in recent, you know, in recent weeks. You know, we've really had a nice rally here. One of the big rejections, though, was at the 618 retracement. I was hoping, you know, the Aussie would continue higher towards 80 cents. And because I really wanted to be on the short side of the Aussie up here. That was my, you know, full-on intention. Now I'm starting to question if it's even going to make it up there, excuse me, because we got stopped at the 618. And you know, that has rejected rejected prices thus far. Now, one of the other things too about the Aussie is that you got, you know, copper. It looks pretty weak today, or at least it was, you know, down 1.5%. You know, gold isn't making any move. Silver's still stuck in the mud. So, you know, without some of those other forces helping up, you know, these commodity currencies, it's kind of stalled the Aussie's ascent. So be careful if we trip, you know, stops below 75 cents. I think that's gonna bring in some Aussie dollar weakness. Now, you know, you may not short the Aussie dollar, but you might look at, you know, currencies like the pound Aussie. You know, the pound Aussie may continue to stage this rally here. Maybe the Euro Aussie. I mean, you look at the Euro Aussie may be ready to go too. You know, Euro Aussie's been just consolidating. This triangle never did anything last week. But, you know, these are currencies to actually watch. You know, these are currencies, in my opinion, that you want to watch here if the Aussie starts to break lower. You know, you might say, well, how about the Aussie New Zealand? Well, you know, the Kiwi is probably going to follow the Aussie lower if the Aussie starts breaking lower. So I would focus on maybe some of the, you know, some of the commodity cross rates, you know, pound Aussie, Euro Aussie. Okay. Let's go over to the dollar index. And by the way, you know, I was using a little bit darker font yesterday, or a darker screen. Is this chart easier to look at on your eyes than what I was doing yesterday? Yesterday I had a really dark blue background. Is this easier to look at? Yeah, okay. Because I know a lot of people were like, oh my God, that dark blue is killing me yesterday. So okay, good. I figured it'd be a little easier on the eyes. I've been toying around with a couple things like you know, with RSIs and just making them look a little bit better. But anyway, all right. So here's the dollar index. Let's go over to the hourly. Now, obviously, the dollar index is pretty range bound. You know, longer term. So if you go over to the daily chart, you can see, you know, after the, you know, historic run, you know, back in the you know, end of 2014, beginning of 2015, it's really just been very range bound here in the dollar index, and there hasn't been a whole lot going on. You know, just a lot of back and forth. You know, as we're looking at the dollar, I went the wrong way. As we're looking at the dollar, here's the 4-hour. You know, we're holding support right now, which is this has been a fairly shallow retracement. Okay. I mean, the 38% retracement here, I mean, that doesn't even come in until about 90, 95.70. So for today, this 95.80, 95.85, that's going to be support. Okay. Because if we break that, then you know the dollar's, coming under pressure across the board. Okay. So 95.85. Resistance, I think we just have to mark up the spike high from overnight, right? 96.20. Pretty tight range. The good news is that we might get a decent breakout today with the dollar. Obviously following Janet Yellen's speech. Okay. Let's go over to the peso. So the peso, okay, we pulled back, and this is, I thought we pulled back a little bit further than that, but we did not. Notice I'm going to have to redraw this trend line just a little bit. It's not an exact science, but we did stop at the 618. Okay, so that means 1740 is going to be pretty important support for today. 1750 is obviously resistance. This was resistance back here. It's probably going to be resistance on the way back up again. So that's good, because now we can go, here's dollar, Mexican peso, 1740 support. If we break back above 1750, break it back above 1750, you'll probably get a little bit of a goose higher. We're still in the range. Let's take a look at the Nordic currencies. Here's the Norwegian krona. I don't even know what to do with this one. This is you can see we're seeing some weakness in the Norwegian krona. Okay, weakness in the Norwegian krona, yet we have, weaker crude oil, which makes sense. Where the Canadian, on the other hand, you have the Canadian dollar, which has been holding up very well despite the crude oil weakness. So, but a look at the Norwegian krona, there's just not anything to do here. I mean, you could short it theoretically. You can short it right now if you want, and try to play the Norwegian krona on the upside, hoping crude oil is going to bounce. But crude looks pretty weak, so I don't know. I don't know what to. I don't think there's much to do there. The Swedish krona resistance is at 832 still, or maybe even 832.50. That just chopped around there. I mean, support's down here at 812. I mean, if the dollar weakens, this is a really good currency pair to play on the short side, in my opinion. The U.S. dollar, Swedish krona. Um, but ahead of Janet Yellen's speech, I don't know if you really want to do that. I mean, the thing is, you know your risk. I mean, the risk is above, the 833, 834 level. But just some food for thought if you want to play the dollar into the downside. All right, there's your bias chart. Let me go ahead and take some questions. Jerome asked.